Alright, we are recording. Let's start the timer. Hop over to our topic for today. Which will be the swing failure pattern. So with this video, I think I'll be able to add 3 slides to my notes, 1 with a theory and 2 with examples. Yeah, it looks like that guy got liquidated. Liquidated. Oof. Okay, I'll run through this really quick, but there's not much to say because this is really such a simple pattern. Yeah, so basically you have a swing high, and then we have our breakup structure here. But during the break, price is unable to close above the previous high, which would be, you know, the top of this candlestick right here, or the wick of that candlestick. So we have these wicks coming up, and if this was the whole candle body, you know, it wouldn't look that bad. But because it's just the wicks, and the body closes below the previous swing high, it indicates a weakness in the trend with a possible reversal. And then if we just took this a little bit further, you know, price coming down, then we would have our market structure break here. So when you're looking for the swing failure pattern, Kaplan identifies 4 possible scenarios. 2 of them are actionable and 2 of them are not. So the first one is the genuine SFP, where no candle closes above the previous swing high. Second scenario is a candle does close above a high, but it's still pretty weak, because if you're watching it as it plays out, you know, it just barely comes up and then comes down. So it's really just a matter of when the time frame happened to elapse, you know, because price is not lingering up here. It just happened to be up there, say when the 5-minute candle closed. It's not an indication of where it wants to be, and then, you know, it goes down after that. Third scenario is that we develop this little range. This is, as I say here, dangerous, because price could really go either way here, you know, especially the longer this this range plays out. Could go anywhere. Okay, and then the fourth one is it's just there's no swing failure pattern at all, because the break is strong. Yeah, so that's about that. Got it over here in the notes, and my phone is blowing up. Jeez. I don't think trading platforms should show you unrealized profit and loss, because you know, that's just cruel. Just show the realized profit and loss. There's no need to torture ourselves. Okay, but we need to focus. So let's move on. Breakers. That sounds exciting. A failed supply or demand order block. After a demand order block fails to contain price and is violated to the downside, it flips into a supply breaker block. We're going to start with identifying some order blocks, because all breaker blocks start off as order blocks. It is interesting how price just cannot leave those equal highs alone. So we have clear uptrend. Then we have one market structure break here. But then we make another higher high. Then price ranges for a bit before shooting up to take out all the stops that I assume are associated with this level here, coming back down again. So if this is a supply order block, I don't know if I'd really count it as being violated with this kind of shot up and down. It may be that after such a prolonged uptrend, that there will need to be at least a few breaks before it kind of loses its momentum and it can start a reversal. You know, it doesn't just come up, skip, and then immediately start going down. There's this uncertainty level here. But you can see how the order blocks really do line up with where the price wants to create its swings. Almost uncannily, you know, if you look at these levels. I haven't taken the imbalances into account. This is the break that he draws special attention to because it is so strong and it leaves this massive imbalance behind. So if we were looking at this from another perspective, we were drawing our premium discount zone from the top to the bottom. Let's say that is 318 pixels. So we'll take that down to 160 pixels. Back to 318. This would be our premium and discount equilibrium level, and I can only assume the Fibonacci's would be somewhere about here. But anywhere in this top half would be an area of interest for starting a short position. And we see price comes up to fill the top of this imbalance. So we'll walk through his high quality break checklist step by step. Large body candlesticks. Yeah, I think this is the largest candlestick body on the chart. Bring it up to the top. Mostly the same color. Coming down, I think they're all red. I can't really tell with all my overlays, but yep, looks like they're all red. Except for that last one. Strong breakout. It's already been established. Candlestick closes below the previous break, or below the break. Yep, closes well below, all the way down here. So it's not a swing failure pattern. Support and resistance area. I guess if you consider these order blocks to be the support, then yeah, that would be a flip. Let me turn off this. Yeah, so you can see the support and resistance flip here, drawn as a zone as opposed to just a line, because we don't want to trick ourselves by drawing very precise lines on a chart. And then it's like, why aren't these lines working? Fast movement, yep. Yeah, that makes sense to me. Of course, seeing the entire chart after it's already happened is quite the advantage, so. Yeah, this fits nicely within with the notes that we took on breaker blocks earlier in the series. So let's move on to our next example. Actually, this wouldn't be a weak market structure break if we assume the break occurs here, which it quite obviously does. Not to split hairs. And then these would be those equal lows, and we know how dangerous those are. So let's see. Let's draw the premium discount and the equilibrium line. So this drop in pixel form is 345 pixels deep. So we'll take that to 172. So we, after the break, price comes back up to the equilibrium line, and also this imbalance. We don't quite make it to this imbalance or the supply order block up here. We'll go back to the video and we'll see if he has any special comments about this trade. Now I'm wondering why the color switches from demand to supply, green to red, at this candlestick here and not this candlestick here. I'll have to look into that later. Perhaps after the break, we return to the previous swing. Another interesting thing to note is that this EQ line is actually true to form. The support and resistance line all the way back here. The more you look, the more you find. So I'll title this chart SR lip with market structure break. It's got to be in purple though. Those equal lows though, they are truly harbingers of terror. It's really cool optical illusion is this area appears to be a lighter gray than this area, but it's not. They're actually both white. It just happens because our eyes focus on these gray areas. We kind of do a bit of shading, tricking our brain into thinking naturally this area must be a little bit gray too. Look at that. Not gray, not gray. It's gray! Okay. It might actually be gray, I'm not sure. So I'm going to put this one up with the market structure break. And I think there was one more example.
You can see
This guy really is the best. Let me take it back. When you look at this chart, what do you see? Bunch of candlesticks and confusing price movements. Years ago, I was like you. Do not worry. With time, you will be like me. It is like taking the red pill and seeing the Matrix. Right on. He's right on.
Price.
Now, at this point, I've never even seen these videos before, so I really am doing this in real time. Well, learning about this for the first time, that is. Power of 3. Ooh, that sounds ominous.
Find yourself a clear target and enter.
And I'm going to take a quick break. And you know me, I just can't help putting in lower highs and lower lows. Now, what do I see with two higher highs and lower lows really close together? Is a nice order block. And then here it'll turn into a breaker block. You can see how it flips into resistance. Okay, I think we've marked up this chart as much as we need to. Let me just walk through it. So we start with a very strong uptrend, printing higher highs and higher lows. We create a massive imbalance on the way up, which is something we'll mark out. Printing the highest high, higher low. I see these two higher lows next to each other, which makes me think that this order block is of special significance. Now this top swing has natural liquidity, so that's what I'm thinking drives the price up a bit, and it goes up higher to try to get the people who put their stop losses at that level. Coming down to the break, all the way down to that imbalance, and then even further. I don't know what's waiting over here, but at any rate, we enter the accumulation phase, and our demand order block switches into a supply breaker block, which becomes the resistance. And if you plot out the EQ line at the 50% level from the high here to the low down here, it actually lines up perfectly. So we have that playing out. The manipulation phase. Actually, let's go through the traits of the accumulation first. It's called the ranging phase. The consolidation stage. There's no trend direction, no clear trend direction. The longest of the three phases, as you can see, that's true. Liquidation areas will appear in this phase. So all of this volume, you know, it's juicy. So that's what we end up getting over here. Equal lows and highs, trend lines. I didn't draw on the trend line, but I guess I could. Nah, I won't. It would be from here to here, somewhere around here. You get the idea. The manipulation is the fake breakout. See these equal highs. So if you were just looking at this, you know, mark those out. And then bam, price surges above it. Trapping beginner traders happens very quickly, you can see. And then the expansion phase is where price ends up going where it wants to. But this manipulation box lines up perfectly with the imbalance printed here. We don't quite make it to this imbalance. Okay, let's bring that over into the notes. Or should I give it a title first? Oh, our notes just crashed. LibreOffice Writer. letting me down. Let's see where the last point it saved was. That's so sad. Well, at least we have it all recorded on video, so I could recreate it that way if I really wanted to, but I don't want to do that. Yep, everything's right where we left it. So sometimes you get lucky. Let's move on to the next example. Five, four, three,